investing is a like fascinating topic, and that is actually something that in the current game that we are playing with the system is kind of asking us to invest. It is something that they are promoting, but at the same time their definition, or let's say focus, or like the side that they are marketing of investing is not investing really at all. They are calling it investing, that you have the choice to buy like this mutual fund that is investing in the stocks, or this other mutual fund is investing in the same stocks with like microscopic differences, or if you're a rebel, you can buy government bonds. And sadly, like the stocks and bonds and all the stocks in all the companies and countries and everything, they go to the same direction basically. Like it's not, there is like nothing you can do to anything in the systemic side of investing. And that was saddening me, because that is something I was doing to my heart's content when I was 18. Already in 1990s I was investing in stocks. And like Finland was the pioneer of online stock investing. It came in 1998, and I was there, and there was this boom of information technology. For instance, Nokia and many smaller startups. It's already it peaked on 2000, so it's already quite some time ago. But it was a big event back then. I also invested all my money to such companies. I even took a loan to leverage it, and I was only 19 years old back then. And well, it ended badly, because like all these companies like crashed. They burned down, and later on the bank was asking me that hey, this loan, what you gonna do about it? Because it was such reckless that all the listed companies were accepted as collateral up to 60% of their like daily price, no matter that they had risen 5x in the past month, which many of them had. So like actual investing, I want to go to the very basics here, is that you are buying something that is likely to hold its value, or you are buying something that is likely to give you positive cash flow. Like those are the two things basically what an investment can even be. So if you invest in something that doesn't give cash flow, let's say gold and silver are basic investments. When you hold them, you just hold them. Bitcoin is likewise. Your Bitcoin is just sitting there. It is not giving you cash flow. House, if you don't rent it out, then house is the same thing. Land, if you don't farm it or something, it's the same thing. If you believe you are in good part of the cycle, so that you are buying land or gold or bitcoins when they are cheap, and you expect them to go up in value, that's all cool. But they still belong to the category of investments that don't pay dividends or returns. Okay, so the other possibility of investing is investing in some kind of action, because there needs to be human action involved for something to pay returns. At least something. I mean, if you grow something on your land, obviously the land is doing a big part of the job. But anyway, like you invest in shares of companies, you invest in rental properties, you cultivate your land. All these are giving a cash flow. And because our economic system at like this age is so full of money that like it is everywhere except on your pocket, and that is the funny part that I'm getting to later. But like everybody else has money, like, and that's why the returns are so low that when you invest in stocks, like they are paying, like their dividend income is like 1%. But hey, if you invest in bonds, it's even worse. They're paying negative income. that if you buy Swiss government bonds that are paying you back 1,000 francs in 2069, you actually have to pay 1,200 to even get them. I mean, instead of keeping that 1,200 francs in your pocket, the governments, well, not governments, but the institutions are willing to invest it into something that they get less back, and that's guaranteed that they get less. I mean, it's not guaranteed that they get anything, but for sure they don't get even their money back. And this kind of ridiculousness is going on in the society at the moment. And this is what they are promoting us to invest in. So when we go into my philosophy, my investment philosophy is to try to like find energy. Try to find an idea that is not capitalized yet. Try to find like a team that whose potential is not like known to everybody, so that their like value is not fully like realized. Try to find some kind of combination, like a winning hand or something. Kings are cool, but if you have a king with just like crappy cards, you don't win in poker. But if you have like your lucky number, let's say 7, but you have 4 7s in your hand, then it's, you know, it's a bigger thing. But most people don't focus on the whole hand, they only see one card. They might think that, oh, this guy is cool, he's graduated from Harvard, and well, let's not get into that, but point is that the startup culture that started in, well, not started, but actually like it has always been growing, but a big manifestation of it came in late 1990s with the information technology boom. That has been great, because what it is doing is basically like creating a formula that when you want to go to business, you take 3 things: idea and founder, team, and investment. And then when you have the team, the idea, the team, then you make a business plan, then you say, okay, during that time it was usually that the business was always worth 5 million euros in Series A. And then you would raise 1.5 million from the investors. And it was simple. And the investors would get 30%, and the team that usually includes the inventor of the idea, who was usually like the business like guy, or even the CEO or the chairman, that would get 70%. So there you can evaluate that, okay, with this combination, how likely it is that this team is going to pull out what they say. Because obviously every team says in their business plan that they will be making profit in the future, and they are making lots of it. The fact is that most of them don't make any profit ever. The whole thing just doesn't work. And this is scaring people away, that they rather invest in those like things that are paying back very badly, that I wouldn't ever consider paying you know, more to get less back, but that's what they are doing. But here it is possible, and actually you have to turn your mind to the mindset that you are investing money with the expectation to get nothing at all back, 0. But to make it to get it to make sense, there has to be the scenario that you are getting back a lot, because otherwise this wouldn't make any sense, obviously. So this scenario analysis and scenario thinking in relation to startup investments this is basically like if you need to find just one thing that is the core in my investing, this is the thing that I'm able to classify in a meaningful way the possible futures, like what can happen with this company, and then assess probabilities to them, like with what probability this kind of thing is going to happen, in an impartial way, not in a hopeful way that yes, for sure we are going to, the whole world is going to bow to us, because like often business plans say that even I have a company and I have had companies in the past and that say so, but it is up to their reader to evaluate whether it is even possible, and whether it is possible, what is the objective probability of that to happen. Because most often when something kind of saves the world, or like becomes as big as the world, there is big money involved with that. But what people think or don't think is that in a way it's rare for something that starts in your garage to take over the whole world, but at the same time it is happening all the time. It will never stop, because like every time when any invention has broken through to our society, that is something that one guy created, and then it went through to everybody.